All right, so welcome back, Fail-Safe Investors. And if you're new to my page, this is Fail-Safe Wealth. My name is Terry, where I do research on companies or stocks or give advice on building wealth so that you can have a better future for yourself. Cue the intro. Let's go. Okay, so if you've been following my page recently, a couple days ago, I did a video on should you be buying Discover Financial Services, or ticker symbol DFS. It looks like a good buy to me, but that's for you to determine for yourself. So after I did that video, I thought I should compare that to another company in the same sector and see how it weighs out. So what better company to compare Discover to than its pretty much biggest competition, or anyone's biggest competition in the payment services field, Visa. So Visa is the number one payment processor, the number one. It doesn't get any bigger. But Visa differs from Discover in one big way. So Discover is a bank. And like I said, most of their income or revenue is generated from them charging interest fees on the credit card side. With Visa though, they technically isn't a bank. So Visa makes its money just through people using its service. So they're like a third party payment processor. So just from people using their cards, Visa makes money. So since they're not a bank, they do not issue any of their debit cards or credit cards. They don't receive any interest payments from those or transaction fees from the merchants or any of those things. They literally just make money just from people using their service, like a software almost. It's kind of like the Italian vouching for you at the family. You know, I swear on my sister's kids, he's good. Luigi, a Ferragamo, yeah, they're good. So Visa, ticker symbol, just the letter V, has a very, very large market cap of $368 billion. It's huge. And a share price of $181. So, like I said, don't look at the market price. You have to value a company based off what it can produce for you. They have a market price of $181 and a price to earnings of 31. So that could be considered high, but like I said, the way things are trending, Visa could be expected to have a lot of earnings in the next 5 years. So that's why you might see a price to earnings in this for 31, which is $31 to every $1 that the company brings back in. But like I said, this company could be expected to do a lot in the future. They also have an earnings per share of $5.48, and this company does pay a dividend of 0.7. So that is less than the dividend yield of Discover, but this company is bigger and they expect it to grow more. So it depends on what you're looking for. You're looking for that long term, you're looking for that big growth, and also, like I always say, you have to do more research on your own into these companies to see if this is something that you want to invest in. Since Visa makes its money through processing payments, they make even more money when they have to process international fees or international payments, which is where you're in another country, you use your Visa card, you pay for something. So Visa has to convert that money from the US dollar into whatever currency that you're using to pay for your product. So they make more money off international fees and international transactions. So Visa has a lot of things going for them. Visa was also part of a contract that was just made between the US government and MetaBank and another company. I can't think of the name right now, you can look it up. But pretty much, since the government was running into problems with delivering people their stimulus checks and they're considering a second wave of stimulus checks, they talking about issuing a prepaid debit card. Pretty much Visa is going to be the prepaid card that's that's going to be pretty much distributed to every single American. And since you got to think of it like this, since Visa gets paid just from people using their cards, and every single person in America, which is more than 300 million people, are about to receive a prepaid debit card with money already loaded on it, more than $1,000 easily. Visa is about to make a lot of money off that just from winning that contract alone. So their profit margin is about to pretty much expand. You have to consider that when you're looking at into a company. Like Don't look at the price of the share. Look at the profit that the company is bringing in. And Visa, if this actually goes through and they ship everyone a prepaid debit card with money loaded on it, it's going to be crazy for Visa. So they're making things happen. Also, on the side of innovation, Visa, like I've mentioned before, Visa and MasterCard have teamed up to come out with a biometric credit card, which is like pretty much scans your fingerprint on the card when you're using it. So it's already like pre-approved with your fingerprint. You don't need your PIN. So you just put it in, reach your fingerprint, approved, and then you're out. So Visa's staying ahead of the curve on a lot of things. But the downside is if cryptocurrency does eventually take off, which I don't see it taking off within the next 5 years, even with all the advancements that we're making, if cryptocurrency take off, it would eliminate the need for a debit card or credit card, because you got to think of it, the use of debit cards and credit cards is to carry your bank or your currency in your wallet. So you don't need cash. So when you use your debit card, that payment is processed by Visa or whoever issues the debit card or credit card. That payment is processed, and then your bank has to approve it. But if you have cryptocurrency, the money is already kind of pre-approved on whatever device you're going to use. For cryptocurrency, we don't know exactly how this is going to work, but there has to be steps to this, like everything. So cryptocurrency might even piggyback off of some of Visa's stuff. So cryptocurrency might even piggyback off of some of the advancements that Visa has already made. And Visa might be an intermediate or something to use until cryptocurrency take off. So Visa is in a great position right now, because right now everyone that I know personally uses a debit card or credit card. And even if you're on like unemployment, like a lot of people are right now, those cards are Visa pretty much. They use Visa as their unemployment cards, the prepaid cards. So Visa's in a really good position right now, but they're already huge. And if cryptocurrency take off, that will pretty much practically eliminate the need for Visa. They also compete against PayPal and Square and other payment processors from people using peer-to-peer payments and stuff like that also. So you have to consider that also. But even Square Inc. issues their debit card with a Visa stamp on it. So they have brand recognition also. Like I'm pretty sure you heard the saying, Visa everywhere you want to be. Currently, Visa employs 19,500 employees, but they operate out of 131 offices around the world, with between offices and data centers. So that can get quite costly when you factor in the leases that they have to pay and the employment that they have to and the payments that they have to pay their employees, plus benefits. So currently Visa is paying $3.4 billion a year for all of that, so, which is like their employment, payments, compensations, benefits, and all of those buildings. So $3.4 billion isn't bad, but they definitely could get that down lower. $3.4 billion isn't too bad. And we know everything we need to know about the company, or enough. Let's get into my favorite part, the financial statements. Visa made $22.9 billion in revenue last year in 2019. And from that $22.9 billion, they was able to keep $14.9 billion in cash and short-term investments, $4.7 billion in loan receivables, with a total current assets altogether totaling 20 billion, a little over 20 billion in total current assets. So that's pretty good when you look at their liabilities. 0 in current debt, which is great, but 4 billion in loans payable. So they're not completely debt free, but they're in a really good position. And then when you look at their total current liabilities or debt or bills that's due within this year or the next 12 months, $13.4 billion. So when you weigh out $13.4 billion against 20 billion in current assets, they're in a really good position. So Visa has a total assets of 72.5 and a total liabilities or debt 37.8. So that's a pretty good, that's almost 2-to-1. So it's a pretty good balance sheet. So moving on, let's go to the income statement. So like I've already said, Visa has revenue of 22.9 billion, and from that 22.9 billion, they have a net income of 11.6 billion dollars. So they was able to keep 11.6 billion after taxes and everything. Really good, because they don't have that much overhead. And then last but not least, you want to get the free cash flow. So when you take that $11.6 billion and you subtract the $756 million that they had in capital expenditures, you're left with $10.8 billion in free cash flow. So that's profits. That's all I got for today's episode. Good luck with those fail-safe investments. Hopefully you learned enough to go out there, have the confidence to make an investment today, and never stop. Always be investing. You can do a dollar cost averaging. That way you don't have to go through the emotion of selling when your price go up or down. You can just invest what you can afford, and you don't have to worry about all the emotions involved with it. But that's all I have for you today, and let's do it. Wait. Before you go anywhere, make sure you hit that subscribe button. Thanks.